Welcome back everyone, and in this video, we are going over 3 high growth stocks that have performed extremely well over the past year, and analysts are predicting these 3 companies will continue to grow for many years in the future. They are all market leaders in their respective industries, and they have strong innovations that are expected to lead to massive long-term performance. And for all 3 stocks, we're going to take a look at their current financial position, discuss the future growth potential, and take a look at analyst price predictions going forward. But before we jump into that first company, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe to the channel for daily videos, and today we're going to focus on 3 high growth companies with massive future growth potential. And the first stock that we're going to take a look at today is Adobe, ticker ADBE, currently trading for $496 per share, and the company has grown by over 33% on the 1-year chart. Over the past 5 years, the share price has increased 552%, which is absolutely incredible. And the current market cap on this company is at $235 billion. And just a reminder, if the $500 share price is out of your price range, with fractional trading that is offered on most brokerages, you can buy in for as little as $1 into this leader in the software space. And right now, the company operates in 3 main business segments. They have their Adobe Creative Cloud, the Adobe Document Management System, and even Adobe Experience Cloud. And as a whole, their products are way up above their next competitor in quality and performance. And Goldman Sachs has just upgraded Adobe to a buy with a price target of $580, well above the $500 level that we sit at today. And Goldman predicts double-digit revenue, earnings, and cash flow growth for several years in the future. And Adobe continues to perform extremely well, and they remain very innovative. Each and every year, they're coming out with new products to expand their already vast network. And as more products continue to come out, it drives in more consumers, and as a whole, the entire Adobe ecosystem continues to grow at a fast rate. And this growth is not expected to slow down anytime soon. The company has major growth drivers that are going to lead their business to a next level over the next 3 to 5 years in the future. They have a ton of new applications and services that are all going to tie in to their already market leadership position and only grow from where they are today. And taking a look at their latest financial highlights, the company has performed extremely well. Total revenue grew 15% year over year, and GAAP earnings per share was up 81%. And the company also generated $5.7 billion of cash flow from operations. And all 3 other business segments posted double-digit revenue growth over the 2020 fiscal year, which is absolutely incredible. They are a nice, well-rounded business that continues to grow equally across all their different segments. And taking a look at some key financial stats, their profit margin is at over 40%. And that's incredible. Being able to maintain such a high level of profitability is what makes the software sector so attractive to investors. Their operating margin came in at just below 33%, and the return on equity is now over 44%. And taking a look at their income statement, year over year, the company continues to grow their total top line and have generated around $12.8 billion of total revenue during the trailing 12 months. And taking a look at their net income, it now sits at $5.2 billion, which has seen a massive explosion over the prior year. So even throughout the fiscal year of 2020, when most companies had increased costs that hurt their bottom line, Adobe was able to grow their net income by a massive rate year over year. And going forward, analysts are predicting close to 17% per year growth and have the company rated as a strong buy. And the current price of $500 per share sits well below the 12-month price target at $563. And once again, Goldman has set their price target at $580, so analysts are predicting a ton of upside going forward from Adobe over the next 1 to 3 years. So definitely take a look at this company moving forward. They are a fast growth name operating in a highly profitable sector and will continue to expand and innovate for many years in the future. And now if we move on to the second stock in today's video, we're going to go over Chegg, ticker CHGG, currently trading for $106, and the company has grown by 135% over the trailing 12 months. Their current market cap is at only $13.5 billion, and this company operates a direct-to-consumer learning and education platform. And right now, they offer services for almost every topic of study imaginable. And they are a leader in this space, and 87% of college students surveyed have heard of Chegg. This is one of the most well-known platforms for educational services within the younger generations, and as schools only become more digital, services like Chegg are only going to grow in demand. And with the pandemic shutting down schools all across the country and forcing students to learn at home individually, services like Chegg, who provide easier study alternatives and practice problems, are only going to grow in popularity. And being the most well-known name in that educational space is going to lead to long-term sustainability of the Chegg brand over the next few decades. And right now, the company has more than 6.6 million paid subscribers, and that has grown 67% year over year. And the total revenue for this company is up 57% over the trailing 12 months, with an adjusted EBITDA margin of 32% overall. And right now, their continuous growth in subscribers has been absolutely impressive. 67% growth in the fiscal year of 2020, and Chegg services are growing at a CAGR of 39% year over year, again, which is absolutely insane, and that growth is not looking like it's slowing down anytime soon. And moving on to Chegg's financial statements, we can see as total revenue continues to grow, the net loss per year is narrowing each and every year. 5 years ago, they lost $42 million, but as time goes on, they're improving and growing, and in the trailing 12 months, they only lost $6.2 million, which is really nothing. And we're seeing they're approaching profitability, and over the full fiscal year of 2021, we're expecting their first straight 12 months of total profit. And taking a look at their balance sheet, they have a very strong short-term financial position. Their total current assets come in at $1.1 billion, with total current liabilities of over $100 million. So right now, their current ratio sits above 10, which is extremely strong, and no worry about some short-term liquidity issues whatsoever. And taking a look going forward, we're predicting 30% per year growth from Chegg over the next 5 years, and analysts are really predicting some strong performance from Chegg going forward. And so far in this video, we've taken a look at companies like Adobe and Chegg, two software-based names with fast revenue growth and expansion focused on a subscription revenue model. I am personally a huge fan of subscription-based businesses. I love the consistent and predictable cash flow each and every quarter, and over the long term, they will continue to grow and expand as time goes on. And now moving on to the third high growth stock that we're going to go over in today's video, we have Square, ticker SQ, currently trading for around $265, and the company is up 221% over the trailing 12 months. They have absolutely exploded, going from around $79 per share to over $265 at this current level. Their current market cap is at $116 billion, and they are a leader in the online and digital payment space, which is an industry that is only expected to see some rapid expansion over the next few decades in the future. As society transitions away from traditional retail and focuses on online purchases, companies like Square, who offer those digital payment solutions, are only going to grow in popularity. And taking a look, their performance over the past year has been absolutely incredible, and they have been posting record-breaking numbers. Taking a look, over the latest quarter, their total net revenue came in at over $3 billion, which grew 140% year over year. And the company generated $37 million of net income over the latest quarter. And each and every metric saw massive expansion. Gross profit was up 59% year over year, and their Cash App gross profit grew 212%. And the Cash App is a very strong aspect of Square's business. It continues to bring in more users quarter over quarter, and as they continue to innovate and expand the options on the app, it's only going to grow in popularity moving forward. And this app brings in a ton of revenue Square year over year. And it has seen some mass expansion, growing by more than 64% year over year. And if we take a look at the total income statement for Square, we can see the total revenue from this company continues to grow at an exponential rate with over 7.6 billion in the trailing 12 months. And if we take a look at their bottom line, what's extremely impressive is the company is now profitable. We saw them lose massive amounts of money year over year, but as time went on, they were posting better financial results and losing less money each and every year and are now profitable with over 310 million of net income over the trailing 12 months. And taking a look going forward, for the full fiscal year of 2021, we're predicting more than 36% total revenue growth, and the overall share price from this company is expected to grow by 40% per year over the next 5 years in the future. So analysts are predicting huge growth from Square to continue for many years going forward. The company is considered a buy at this current level, and I believe Square is only going to remain as a market leader in the fintech space for decades going forward. They offer some of the best products for zero or low cost options, and I think right now the Cash App and their auxiliary services are only going to grow in popularity as consumers shift away from using cash at in-person retailers and are becoming more financially aware and going with the best alternatives away from the traditional banks. So definitely keep your eye on Square going forward. It's an innovative company offering new products each and every year. They're growing their user base, growing their total revenue, and are now profitable, and a ton of positivity surrounding this company and their industry for decades in the future. So in this video, guys, if we wrap it up, we've gone over 3 stocks to take a look at right now that offer some very high future growth potential. We've gone over Adobe, Chegg, and Square, and please let me know down in the comments your thoughts on these 3 companies or any alternatives that you believe are very strong going forward, and we will definitely discuss them in a future video. So thank you for watching, everyone. I am the Gen Z Investor. Please hit that like button and subscribe, and see you in tomorrow's video.